First concept that we're doing is the money measurement concept. Do you know what is money measurement concept?
Yeah.
Yeah, what? What is money measurement concept?
That accounting, you can only record stuff that can be measured in terms of money.
That is
Yeah.
related to money. You record only those stuff that is related to money that can be measured in terms of money. That means any
See,
skill, loyalty, knowledge, expertise is not recorded in the books of account. So come on, relate this definition and give me the answer.
see,
Only monetary values are included in the accounts. Come on, go to this one, second one. What is the second one? A business decides that they will record inventory of stationery as asset. Now remember, stationery is an asset, but because stationery is of small value, that means if we buy a stationery, maybe it will be $1, $2, or maximum stationery that you can buy is of $30, $40. Okay, so though it is an asset, we treat it as an expense. But now this business has decided that they will record stationery as an asset because only those stationery which is over $100. So expensive stationery, they are planning to treat it as an asset. So which accounting principle is applied?
see, materiality.
Why? What is materiality?
That stuff that is irrelevant to record, like cheap stuff, you don't record it.
But now they're recording it, right?
Yeah, because
Inventory
it's over
over
100.
100. They are recording it.
Yeah, so it's still materiality concept.
Materiality principle. This is a new principle, Hassan, for you. Materiality principle, they tell you if something is of high value. High value, or I could say if something is material, the existence of which affects you. You record it. That means you are following the materiality principle. Which principle you are following?
Materiality.
Materiality principle. Do you all know what is dual aspect?
Yeah, it is this one, double entry records. One, you record both aspects of transaction.
Every transaction has two aspects, one debit, one credit. Dual aspect.
Yes.
What is the different name of dual aspect principle?
Duality concept.
Yeah, it's
And-
duality.
I think that's it.
And
Yeah.
the bookkeeping system.
Alright.
What is money measurement concept?
Can you explain conservatism again? Just one more time.
Yeah. What is money measurement concept?
Recording only transactions that are involving money.
Okay. Conservatism and prudence is the same thing. Conservatism
So yeah, okay.
and
Being
prudence
careful.
is the same thing. What is the
Okay.
meaning of conservatism and prudence? You are being extra careful.
Being extra careful. Yeah.
You are being extra careful. That means if you see any future loss, you record for it. So if you think that your debtors, your customers will not pay you, you record provision for bad and doubtful debts. Do we do or we do not do? Yes, now we record provision
we
for
do,
bad
we
and
do.
doubtful debts. We estimate that our customers will not pay us. So which principle are we following? Conservatism, conservatism or prudence? Okay. Just recalling, what are the principles that you all know of? Can you all tell me? Anybody can randomly speak any principle that is coming to your mind.
Prudence.
What is prudence?
You record all losses and always assume that you're going to get loss instead of profit. That way, profit is never overstated.
Okay, now your turn over. Anybody give any other concepts that you know? Achman, Bolak, Humed, Ismail. Anything, any concept that comes to your mind?
Duality.
Okay, Achman, duality. What is duality?
Each transaction has two sides, one debit, one credit.
Okay, Achman is given. Now Ismail, Battu and Humed.
Money measurement.
Money measurement. What is money measurement?
Recording the transactions that only involves what was it? Money.
Money.
Yeah, that's it.
Hassan's turn is over. Now Humed and Ismail.
Materiality.
What is materiality?
When something is high in value.
High in value is recorded. Material to you. What do I mean to say that it is material to you?
Like important.
It is important to you, which could affect your decision.
Valuable.
Yeah, okay, fine. Ismail left. Okay, come on, go to the third one. Two companies are buying identical computer system. The bigger company writes it off immediately. But the smaller company is treating it as non-current asset. So bigger company is not finding that computer very material. They think it is petty expense. And smaller companies treating it as non-current asset. Which concepts are the companies applying?
Materiality.
They are applying the materiality concept. What is accounting entity concept?
Accounting and there's business entity. There is no accounting entity.
There is no accounting entity, there is business entity. What does business entity tell you?
That the owner of business and the business are treated separately in the records of business.
Okay, fine. Go to the next one. What is the meaning of prudence concept?
It is
Accounts should provide for all probable losses and should not anticipate profits.
Okay, fine. Which accounting concept is followed when you create provision for doubtful debts?
Realization.
C. Prudence.
Prudence. Provision for doubtful debts means prudence. What is consistency?
Being consistent, keeping on doing something on a regular basis.
Okay.
Yes.
What is realization?
That the expenses of business are matched with the
No.
income of business of
No,
same
no,
year.
no.
No?
What is
Okay, sorry.
realization?
Accounting records are for same
Okay,
year or something.
realization is, listen very carefully. Realization is you will record profits only when earned. You will record the profits only when earned. It does not matter. It does not matter whether you receive money or no. Miss, what are you telling? Suppose I have a shop and Ved is entering into my shop. Okay? Ved is entering into my shop. He tells me keep aside 2 dresses. I'll just come. Will I record this as my sales? Will I record when a customer just enters and tells me keep this aside? Can I record it as sales and profit?
No.
No. So realization concept tells you that don't go in the hallucination mode. Only when the customer takes the delivery of the goods, only when the legal title is passed away, then only you can record it as sales. It is okay. You can sell on credit. We are not saying that if you sell on credit, don't record as sales. But the possession of the goods should pass from your hand to the other. If he is asking you to keep it aside, don't treat it as sales. Which concept tells you this? Which concept tells you this?
Realization.
Realization.
What is the matching concept?
Expenses are matched with income for same year, same period, accounting period.
Matching concept tells you expense for the year. It is matched with income for the year. It does not matter whether you pay or you did not pay, you receive or you did not receive. That is why all outstanding is added and all prepaid or pre-received is subtracted. Okay, no. That is why all outstanding is added and prepaid or pre-received is subtracted. Outstanding is added because even if you don't receive it, it is still income for the year. And pre-received is subtracted because it relates to the next year. It is because of matching that we add the outstanding and minus the pre-receipt. Let's go ahead. Come on, tell me the sixth one. Which two new things you all learned right now? Realization, matching. Yes?
Yes.
And also consistency. Just look at these words and tell me if you don't know the meaning of any of these. If you don't know meaning of any of these, please tell me. Can I move ahead?
Yes.
Come on, do this one, sixth one. X owed its staff 1 week wages, but it added this amount to wages actually paid to get the wage expense for the year. That means it is adding the outstanding to get the wage expense for the year.
Matching.
Which accounting principle are we following?
C. Matching.
Anybody
Matching,
has
yes.
doubts? Anybody has doubts?
No.
Tell. What doubt you have?
Ma'am, what is accounting entity?
It is business entity. Business separate, owner separate. Because of business entity, we pass entry for capital and drawings. Okay? Come on, go to the seventh.
Okay.
Duality.
Why duality?
Because, wait, yeah, it has two effects. One debit, one credit.
Okay. Machinery account is debited and bank account is credited.
Yes.
Okay. Anybody having doubts?
No.
Come on, go. Which accounting principle requires business not to anticipate profits, but
Prudence.
provide for foreseeable loss?
Prudence.
B.
Yes.
Prudence. Don't anticipate profits, provide for foreseeable loss. Okay?
Yes.
Come on, 9th.
Hundred.
What?
100.
Purchase computer,
D.
purchase monitor for
A.
70
It is
and paid
A.
for 25 for the monitor to be installed. What figure of computer will be shown in the balance sheet?
A.
Not A.
D. D is the answer. We had all of them right.
All of this.
Yes.
Okay.
Miss, but computer and monitor is different.
Computer is the CPU. Monitor is the screen. And installation.
But installation of monitor, they're asking for the
Up till the time you use your asset for the first time. Before using it for the first time, all expenses that you incur, before using it for the first time, all expenses that you incur will be added to the cost of the asset.
wait, miss, but it is $25 for installation of monitor, not computer.
So
So
computer
aren't they different
and
assets?
monitor both is asset, right?
Yeah, but they're asking only the value of computer, one asset.
Full will go for computer ना बाप. Computer बिना monitor के नहीं चलता. Come on, go to the next one. A very large company has prepared financial statement and it did not include small items of furniture as non-current asset. Small value items not included. Which accounting
C is the
principle?
answer. C.
Materiality. We don't include
Yes.
small items.
Yes.
Materiality. Come on, this one, but two will answer.
Business values its inventory at the lower of cost or net realizable value. Which accounting principle is being applied? Money measurement, of course, you showed the answer.
No. When you
Prudence.
value inventory at lower of cost or NRV, we are following prudence.
Why?
Prudence, because you're valuing your inventory at a lower price. That means if you see foreseeable loss, you record it. You don't record at higher price. Prudence is used in many concepts, in many things. Just remember the names. Prudence is
Oh,
used in
yeah.
inventory valuation. Prudence is used in bad debts. Okay. Matching is used for matching or accruals. It is used for depreciation. RBDD, provision for bad and doubtful debts. This prudence is provision for bad and doubtful debts. Depreciation, provision for bad and doubtful debts, outstanding and prepaid. Matching is also called accrual. So these are the hints that you could remember. Okay? Not recording skills and expertise. If you're not recording skills and expertise, if you're not recording this, then which principle? Money measurement. So you value your inventory at lower of cost or market value. That means you're following prudence. Come on, go to the 12th one. Financial statements should include all cost and income.
Matching.
The accounting period to which it relates.
Matching.
C.
Doesn't match.
C is the answer.
You want to create provision for doubtful debts. Provision for doubtful debts. Which accounting principle?
Prudence.
Prudence. Who made the answer this one? You paid last bill in November, but you're doing adjustment for December also, so that you can show expense for the year. Which accounting principle you are applying?
Matching.
Matching. Very good. Come on, 15th one. Okay.
C is the answer.
Sorry,
Historic cost.
historic cost is what? When you buy an asset, and you record the asset
The price you bought it for.
at the price at which you purchase.
Yes.
When you buy an asset and you record the asset at the price at which you purchased, you record the asset at the purchase price. So that means you're following historic costs. You don't record assets. Don't record asset at market value. You record at purchase price. Which price you record at?
The price they bought it for.
So it is historic cost.
Yes.
Come on, do the 16th one. You prepare your accounts on the basis that you will continue trade in the future. You're
Going
to
concern.
Going concern. C.
You apply straight line method of depreciation and you wish to use reducing balance method. Which accounting concept advise
Consistency.
Anna?
Consistency.
Change. You are changing the method. So which accounting concept is advising you to change your method? Sorry, it is advising Anna against changing the method.
Consistency.
Consistency is advising against. Compound. Next one. Financial statement should represent actual events. An actual event should be free from errors.
Reliability.
What is reliability?
When the stuff in the accounting records is correct and you can rely on it.
Okay. So there are these 4 words: accounting policies. It is relevance, reliability. It is relevance, reliability, comparability, and understandability. What is it? Relevance, reliability, comparability, and understandability. Can you tell me? 4 objectives of selecting accounting policies. Can you all tell me this again? Can you all tell me the word
Relevance, reliability, comparability,
Comparability.
understandability.
again? relevance, reliability, comparability, understandability. These are 4 objectives of selecting what? Accounting policy. What does relevant tell you? It should be relevant for the users. It should be relevant for the users to make decisions. What does relevant tell you? It should be relevant for the users. By looking at the financial statement, they should be able to make decisions. Reliability means error-free. Reliability means error-free. Comparability means you can compare with others. You can compare with other business which is similar to you. And understandability means it should be capable to be understood. So there are 4 objectives of selecting selecting the policies. What are the 4 objectives of selecting the policies? Relevance, reliability, comparability, understandability. Relevance means it should be relevant. Reliable means without errors. Comparability means you can compare. Understandability means it is capable of being understood. Come on, do this one.
Consistency.
Transactions of similar nature should be recorded in same way in the same accounting period and in all future accounting periods.
Consistency.
So similar things should be done same way every time, every year. Consistency. Come on. Wahida has updated her information system. She sent her employees on a training course. Applying money measurement principle, which would not be recorded in Wahida's accounting record. If you apply money measurement principle, what will you not record?
Improvement of employees' knowledge.
Because it cannot be measured in terms of money.
Yes.
What does money measurement principle state?
B.
Hmm?
B is the answer.
Only information that is expressed in monetary terms has to be recorded.
Yes.
Which principle is applied when a business makes provision for doubtful debts?
Prudence. Oh wait, prudence is not here. Sorry.
Matching
Is
or
it
applicable?
matching? Okay, yeah, matching.
Okay. I just told you prudence. What are the 2 things that you do as per prudence? Inventory valuation and provision for bad and doubtful debts. What are the things that you do as per matching or accrual? Provision for bad and doubtful debts, depreciation, outstanding, and prepaid. Add outstanding minus prepaid. Are you all with me?
Yes, ma'am.
Yes, ma'am.
Which accounting principle is applied when a business uses same method of
Consistency.
depreciation?
Consistency.
What is historical costs?
That we record the thing we purchased it for, the amount we bought it for.
We record non-current assets at purchase price.
Yes.
What is historical cost? Record non-current assets at purchase price, not at not at current value. Come on. Rent unpaid. Outstanding rent is added to business expenses, shown as current liability. Which accounting principle are we applying?
It's matching.
Matching. Okay. What are the things that we do as per matching and accrual? Can you please repeat? But two, what are the things that we do as per matching and accrual?
One second. Yeah, okay, it's matching.
What are the things that we do as per matching or accrual?
In matching, you record the stuff. No, they record the expenses
Provision for
and
bad and
income
doubtful
same year.
debts, depreciation, add outstanding minus prepaid. These are the things that you need to know from MCQ point of view. What are the things that you do as per matching concept? Provision for bad and doubtful debts, depreciation, add outstanding minus prepaid. What are
Yeah,
the things you do as per prudence? What are the things that you do as per prudence? Provision for bad and doubtful debts and inventory valuation. Please learn this. What are the things that you do as per prudence?
Inventory valuation.
And provision for bad and doubtful debts. What are the things that you do as per matching or accrual?
Depreciation or
You
prepaid
add
and
the
outstanding.
outstanding minus the prepaid and PBDD. Come on. Sole trader has purchased the following items from the office supplier. Apply the accounting principle of materiality. What should be recorded as revenue expenditure?
C.
Computer system, so you can't record as
C.
C. Okay. Come on. I think that my business will be worth more when she takes on new, highly skilled staff.
D.
But she can't record this in her balance sheet.
D.
Which principle is stopping her to record it?
Money measurement.
Money measurement. Okay. Assets and liabilities are recorded at actual amount of transaction. Which principle?
Historic cost. Historic cost.
Historic cost. Recorded purchase price. Applying money measurement. What is recorded in balance sheet?
D.
Hmm?
D. The last one.
Okay. Skills and knowledge will not be applied.
No.
Okay. Go to the next one. Give me the answer. Give me the answer.
D. D is the answer.
Sorry.
A.
If I apply historic cost, I can know the cost and I can verify.
Yes.
You can't compare it. It has no effect on inflation, and non-current assets are not shown at realistic value. So this is the advantage of historic cost. Come on, do the 30th one. Loose tools are shown at valuation. That means only material amount is recorded. You don't go and value each and every loose tool. We follow
materiality,
materiality concept. 10 more. Then I give you a break. Personal use item excluded. Which accounting concept? Business entity. I think you are tired. 32 to 40, try it yourself because you are not answering.